Hey, good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, June 23rd. Sorry, folks, today is kind of a late edition as it's been kind of a crazy Monday. Got a couple of economic news releases to go over today. We got the Market Flash PMI. This is kind of like the manufacturing stuff out there, industrials. So we had a 56.4 back in May. Anything above 50 is considered expansion, and it pulled back a little bit. So still in expansion mode, but just not as good as May's numbers, 55.5. Existing home sales for the month of May. So April we had a 44.66 million existing home sales. The forecast was supposed to jump up to 4.75, and we exceed that forecast of 4.89. So good numbers. Flash, you could kind of look at that still in expansion mode, but it did pull back a little bit. But existing homes even jumped up a little bit in the month of May. So summer might hopefully heat up a little bit more. We'll have to wait and see. As a lot of areas are still kind of seeing low inventory in there, and being on my side of things, I'm also seeing a lot of escrows going longer escrows due to sellers wanting, because of low inventory, sellers want extra time to be able to look for their next property. So we're seeing a lot longer close times, escrow periods. So we got stock market ended up closing mixed. Dow and S&P both closed down, so Nasdaq was really one that actually closed upwards. So even though we had decent economic news, it basically is kind of being viewed that the market might be a little bit overbought. So you're going to probably be seeing some sell-off or pullback on the stock market, which could help us out in the bond market. So kind of as a result, we're kind of about where we left off last week. We did kind of have some peaks upwards and pull back a little bit, but overall a decent day today, and stocks are probably had a slight improvement from where we left off on Friday, from what I'm seeing today as a result. All right, so decent numbers today, but hopefully we may even see a little bit more, especially if the stock market goes through a correction. That money typically go into the bond market and help keep the rates low. But the one drawback we're seeing is obviously going to be competing against is the pullback of the Fed, reducing every meeting they had. They've been reducing their mortgage-backed securities, their purchases in the market. So there's going to be less demand. So unless somebody else steps up, which is difficult to assume that's going to happen, and buy up that extra $10 billion that they are decreasing every time they meet, rates will be probably in the near term will be climbing up eventually here as supply, decreases a little bit. So expect that. All right, folks, you guys have a wonderful day here, and we'll look forward to seeing you guys tomorrow. Thanks for watching, and again, we'll see you guys tomorrow.